Everyone is talking about the 4-year cycle being dead. But what if I tell you that's exactly why we're going to see the biggest bull run this next year in 2026? All right, today I'm going to show you why the institutions really just changed up the game. Ever since the ETFs came out, it's been a totally different game. Retail is out of play. And why we're not even close to the top yet. Let's get into it. All right, so here we have Fear and Greed Index. It's at 11 right now. That's crazy. And we're at 91,000 and it's at 11. Last time we had this type of fear, I think it was 2020 when Bitcoin's price was 3,000. So if we're at 91,000 right now at this much fear, I mean, I don't know what greed is going to look like. This is insane. The game's kind of fundamentally changed. This is traditional retail, right? Fear indicators. They're still working. But in reality, the ETF flows are just a lot higher than sellers. These retail sellers, and mostly they're the old school, the OGs essentially. You know, 2013 guys, the 10,000 Bitcoins, those pizza type of guys who were selling Bitcoin for pizza. So those guys are apparently selling, but all of that sell side pressure, it's just being gobbled up by institutions and ETFs. Speaking of institutional adoption, check out this post by Eric Balchunas. So Harvard is basically its biggest exposure is Bitcoin. It's bigger than Microsoft, bigger than Amazon, bigger than Google. Bitcoin ETF, the IBIT ETF is Harvard's. And these guys are known to be just super conservative. And these guys, they don't just buy and sell. They don't day trade. They're in it for a long time and hold. They're holders just by default, really. They hold through everything. And here's strategy. They actually bought 8,000 Bitcoin just today. Here's a video from a couple days ago.
Michael, given where Bitcoin's trading right now, are you buying?
We are buying. We're buying quite a lot, actually, and we'll actually report our next buys on Monday morning. I think people will be pleasantly surprised. In fact, we've been accelerating our purchases.
Are you ever not buying, Michael?
No, we're always buying. Bitcoin's always a good investment.
But no, that's interesting, though, in terms of buying today at $95,364 versus buying 2 or 3 weeks ago. You're saying you were buying at both. If you were to look over the last year, sort of at your average, do you weight the buying based on trading?
We now own nearly 3.1% of the network, and we bought it on a blended average about 74,000 a coin.
Here's another tweet about the Bitcoin 4-year cycle. You can see, we have the little green here, then we have the blow off top, then we have a big decline, 87%. Again, blow off top, down again, blow off top, down again. And this time, no blow off top. It was kind of just steadily going up, 18%. I think actually, as of today, we're up, as of the last 12 months, it's just up 0% exactly. So in the last 12 months, Bitcoin's up 0%. So it hasn't had a bull market. 2025 wasn't a bull market as everyone's been expecting. Unless we see something in the last 2 months here, it just hasn't been the case. So I don't think we'll see a big decline like these 77, 84 back in the day, because we haven't had the blow off top. So we can't see that. And again, it's not a retail game anymore, so it's not as predictable as a 4-year cycle. JPMorgan, it sees Bitcoin support at 94,000. We actually broke that already, 91,000. And they keep their 170K upside intact, which is, I think they said in 12 months, 170K. Now, obviously, this broke, but nonetheless, it's kind of in the same range here. I think we're at 91,000 right now, 92,000. And then back to more institutional adoption. The Czech Republic central bank buys $1 million in Bitcoin and some other crypto assets for testing. So they bought $1 million in Bitcoin just to test, hey, how's it going to do? And this is basically the next step of institutional adoption is the central banks. It's always going to be the smaller central banks that go first. So Czech Republic seems like they're trying it out. Let's see how it goes for them. And then we get the actual, the bigger central banks. $1 million is nothing, but, it's a start. So while everyone is kind of anticipating a downfall, like a 50, 60%, I think I saw people saying we're going to like 50, 60K. I just don't see it. Trump is not going to let this market crash. Recently, Jerome Powell, I think some odds came out with the rate cuts chances going down in December. Even if that's the case, Jerome Powell only has so much time left. I think his term ends in May 15th, 2026. He only has so much time left. Once Trump appoints his, I say Trump, even though Fed is supposed to be independent of the government, but in reality, we all know that they're really not. Whoever Trump puts in charge here at the Fed, they're going to start printing it up. And QE, Jerome Powell has already said is ending. QT is ending. QE is beginning. They're going to start buying more treasuries, more of their own treasuries. The problem is there's no demand for the treasuries, so they have to buy their own treasuries, okay? And to do this, they have to print a lot of money. Of course, we know when you print a lot of money, a lot of that flows into Bitcoin. By the end of around this May timeframe, right, Trump is also going to be the mid-year elections, 2 years in. He wants to look good. He wants to pump the markets. So he's not going to just stand there while markets crash and everything crashes, especially since he said, Bitcoin is the future and they don't sell Bitcoin. Here's another article. Bank of Russia recognizes Bitcoin as a high return asset. So this is just them recognizing it. They haven't made an investment or anything, but they're putting it in the same field as gold and all these other investments. So you can see that Bitcoin isn't just like a random coin anymore. It's an actual asset that countries are recognizing and actually wanting to invest in eventually. I think it'll be, what's happening here is, let's go back to this chart. What's happening here is we're losing the volatility. So we're not going to see the upsides, like the crazy upsides that we have in the past, but we're also not going to see the downsides. I think we still have a little bit of volatility left in Bitcoin for sure, but it's not the same as it was back in the 2013s, 2017s, 2021 even. Institutions are here. They don't day trade. They hold, they sell when, they've done a lot of research if they need to. But in reality, like these institutions aren't selling. It's the OGs selling. And the ETFs are gobbling it up. I just don't see all this bearish sentiment actually playing out. I know everyone's bearish right now, but whatever. Let's say even if it goes to 80, 75K, whatever. I'm a buyer at that point. That's a great price to pick up some Bitcoin. Because if you think about it, if you actually zoom out, Bitcoin's going to capture most of the world's value. AI is coming along. Bitcoin and AI is essentially peanut butter jelly. That's a great one, right? I know you like that. Blah, blah, blah. And one thing that everyone's kind of forgotten about is the Bitcoin strategic reserve. If that happens, guys, and that's going to happen out of nowhere because I feel like everyone's kind of forgot about it. If that happens, we're going straight to the moon. No one's even going to know. All this FUD right now, nothing in Bitcoin has really changed. It's all the same. Whether it's institutional manipulation or not, that's a question that I got. I don't know if it's true or not. It might be. Institutions like JPMorgan, I mean, these guys were just saying, I don't know, not too long ago, 4 years ago, Jamie Dimon is calling it a scam, and now he's, analyst from JPMorgan is saying it's going to 170. So guys, you don't have to believe these guys. They might be manipulating the prices down to get in and just trying to shake you out of it. This is generational wealth. They're going to print the money. If you're holding the dollar, you're going to lose. Whether you buy Bitcoin, gold, or some AI play like Tesla, you have to get out of the dollar and you have to get into hard assets. Now, it's your job to study Bitcoin, gold, all these assets to see where you aren't going to lose all your money and you're not going to essentially be holding melting ice cubes. That's all I got, guys. Don't forget, you have to do your own research. This isn't financial advice. And I don't know, while everyone's worried about this 4-year cycle, I don't think it's over yet. I think we're going to see a 5-year cycle, 6-year cycle. I think we're not going to see these big downturns like we have in the past. Bitcoin, once it gets the crypto market structure as well, it's going to be a lot more steady. It's actually going to be a boring asset. It's going to be a real treasury reserve asset. Unlike the T-bills, I think Bitcoin's going to be the boring play. And for me, Bitcoin's a saving account. And gold is more of a 6-month, cash you don't need for 6 months. And honestly, I'll do another video on this. STRC is where some of my cash is going into. Michael Saylor's created a great product there. It's a preferred stock, and he's buying Bitcoin if you buy this stock, and he's giving you a return of around 10% or so, depending on what's happening in the markets. But he's financially engineering a lot of good stuff, and I think that's going to be actually the new Treasury reserve. I mean, you don't want to go into high yield savings accounts that are giving you 4% or whatever that is now. This gives you 10.5%. It's actually considered a return of capital when you get that capital back, when you get these dividend payments, so you don't pay taxes on them. So in fact, the real return, depending on your tax jurisdiction, is more like 16% or so. So I'll do another video on STRs if you guys want me to, on MicroStrategy. Some people think it's a scam, but they just haven't done the research. But let me know if you want that video, and I'll see you guys next time. Peace.